Welcome back, investors, to Ticker Time News. I'm Adam, and today we're talking about Toast, the company. Not the warm, crunchy, and delicious bread, but Toast that went public this week at a $20 billion valuation. We mentioned Toast last week, but today we want to go a little deeper into the company to find out if this is a company that merits our attention as investors. Now, one thing I've learned about investing is that nobody can predict the future. We can have probabilities, but what distinguishes the best companies and makes their shares a good investment? Well, it's their ability to act quickly and efficiently when the unexpected happens. And that's exactly what happened to Toast. To start this discussion, we need a little background on the company. But first, I wanted to let you know about an upcoming new market close live stream that we're putting together. The After Hours show will premiere on the first Monday in October, and I hope to see you all after the closing bell at 4 p.m. on Monday, October 4th. Now, what makes Toast stand out to me is that just 18 months after laying off half its workforce, losing 80% of its revenues, and reducing executive pay, freezing hiring, and halted all bonuses, Toast, who's a restaurant software company that we'll dig into in just a moment, completed a major pivot to turn around the company and begin trading at a $20 billion valuation. That's quite a successful turnaround for Toast's management team, and I applaud them for this. Toast is a cloud-based end-to-end technology platform purpose-built for the entire restaurant community. The platform provides a comprehensive suite of software as a service, or SaaS, products, financial technology solutions, including integrated payment processing, restaurant-grade hardware, and a broad ecosystem of third-party partners. Toast serves as the restaurant operating system, connecting the front of the house and back of the house operations, online access to dine-in or take-out, and delivery channels. As of the end of June 2021, Toast has 48,000 restaurant locations across 29,000 customers using its products and services. Toast processed $38 billion of gross payment volume in the last 12 months trailing. Toast optimizes restaurants' operations, increases sales, engages with guests, and maintain happy employees. So what is the market for a company like this? Well, the restaurant industry is one of the largest employers in the US, with an estimate of more than 11 million people employed across about 860,000 restaurant locations in 2021, and that's according to the National Restaurant Association. The restaurant industry's share of the dollars spent on food was over 50% in 2019. U.S. restaurants generated nearly $700 billion in sales in 2020, despite the significant impact of the pandemic, representing approximately 3% of U.S. gross domestic product, or GDP. Restaurant sales are expected to grow to more than $1.1 trillion by 2024. The 860,000 or so restaurant locations in the United States are highly diverse in everything from location to type of food to number of employees and the amount of revenue. Most restaurants across the country are small businesses. The restaurant industry, like many other sectors, is undergoing foundational changes driven by changing guest preferences and the urgent need to utilize technology and data to innovate. The restaurant industry underwent years worth of tech adoption in the matter of months. And one of the only way restaurants have been able to survive is by innovating with technology like Toast. and one of my other favorites, DoorDash. So let's dig a little deeper on Toast's financials. If we narrow down to just one of Toast's revenue streams, it's POS, or point of sale system, where you have hardware and software. It's pretty similar to Square. Grandview Research forecasts that the restaurant point of sale, or POS, terminal market, which is the hardware side of the business, will grow from $15.5 billion in 2020 at a 6.4% compound annual rate over the next 7 years. By 2028, Grandview estimates the restaurant POS, or point of sale, software market will increase from $9.3 billion in 2020 at a 9.5% annual growth rate. Toast is growing and taking market share. Total revenue increased 24% to $823.1 million for 2020, as compared to $665 million in 2019. And according to its S1, for the first half of 2021, revenue rose 105% to $704 million. At this pace, the yearly growth rate would exceed 70%. Now, on the other hand, the company is not yet profitable, and its losses are increasing at a rate that reflects its revenue growth. Toast reported net losses of $248 million in 2020 and $235 million in the first half of this year. Toast's financial conditions is that of a rapidly growing company, though. It's improved its free cash flow during the first half of this year to nearly $39 million, a big improvement from the negative $129 million in free cash flow it consumed in the first half of 2020. Toast's strategy is to continue to invest in areas that align with its customers' needs and its own growth ambitions. Toast both drives and benefits from the success of customers. When restaurants grow, Toast grows through higher payments volume and increased adoption of the platform. Now, a quick question for all of you. And I'm wondering if any of you bought Toast at its $40 share IPO price. If not, have you bought Toast since, or are you sitting on the sidelines still exploring the company? Let's talk about it in the comments. I'll join you there in just a moment. Now, what risks are ahead for Toast? Well, if we look at Olo, ticker symbol OLO, who's a competitor of Toast, it went public earlier this year. In its S1 filing, it said they have risk to their business and that it's the complexities that hinder restaurants' digital transformation progress. It's that restaurants historically have not standardized the type of technology platforms used. For example, they conducted a survey and found that 70% of respondents indicated they use 2 to 4 different technology providers. Now, this can be seen as both challenges and opportunities for a solution provider like Toast. So, what can we conclude from all of this? Well, since many restaurants use multiple platforms, even within one location, and much of this technology is difficult to integrate with more up-to-date software because legacy restaurant systems were not built for modern cloud-based environments. There is a need for a technology platform that can handle the complexities of the restaurant business. Another observation is that since restaurants are using older systems that are not connected, restaurants are unable to access their customer data, as it's siloed in different systems and different databases that cannot communicate with each other. I see this as an opportunity for Toast to showcase how their technology can improve the restaurant's operations, increase sales, engage with guests, and access their data, all of their data, to improve everything from what's the best-selling item to supply chains, online deliveries to mobile payments, employees to, well, everything. Toast was a good investment at its $40 IPO price. Now, investors need to buy on weakness like we saw today with Toast down over 5.5%. Toast found support at $53 a share, which you can see right here. And then later into the close, they found support at $55 a share. So keep an eye on Toast, set a stock alert, and see if the stock will go lower to, let's say, $50 a share or less. If it does, I think that would be a good buying opportunity for Toast. What do you think about Toast? Are you looking for an entry point? Let me know in the comments. I'll be there to discuss in just a moment. Thank you so very much for watching, and I will see you in the next video.